This is David for Big Bits. In this video, we're going to talk about a couple of things. First of all, Ethereum and Bitcoin have both exploded in price over the last couple of days. So I'm going to take a look at that and take a look into the TA and why I got into a certain position when I did, and where I'm kind of looking for in the future, and kind of looking at some other things as well. So we'll do some TA towards the end of the video. But if you know me, in this channel, I should say, that we like to talk about digital currencies such as the digital dollar, and there was some news today that I think is going to impact that, but it's really focused towards crypto, and I think it has an impact on the digital dollar as well, so that's going to be important to know in the future. But first of all, I did have another featured video idea on TradingView, and if you're following me here on YouTube, you would have seen that it was the strategy tester video that I just released, and I filmed this, or recorded I should say, on TradingView first, and then I uploaded it later with the edit and the intro and outro later on YouTube. So if you want to see those first, follow me on TradingView and you'll get notifications for that first. And that went really well. I had a ton of likes on that. TradingView was nice enough to feature it on their landing page, so a lot of people get to see that when they first load up TradingView for the day. Now, here's the news I wanted to talk about. Banks in the US can now offer crypto custody, and that is huge. Like, I didn't think we'd ever see the day. Banks, you would have figured, would want nothing to do with cryptocurrency, since a lot of the core beliefs of cryptocurrency is that you don't need banks. So why would the banks want to get in on it? Well, maybe they just want to grab their piece of control while they can. So there's a few things in here that are pretty important. They are going to be allowing banks to hold on to the cryptographic keys, so your private keys for your different blockchains. The banks are going to be able to hold that as part of their custody. And this is going to be similar to how they hold stock certificates and other digital items, things that aren't necessarily physically present at the bank. They say that they may offer more secure storage services compared to existing options. Now, this is a pretty broad statement, and I would say because of that, it is true. A lot of these smaller exchanges and web wallets are pretty, well, they're not very secure, I should say. Every other week or so, maybe even more often, you hear about exchanges being hacked or wallets being hacked on the web. That these things are not secure, so maybe these banks can do it better, and I think they likely will, especially someone like JP Morgan, who has access to a lot of talented individuals. They have relationships with Coinbase, and I think it was Gemini or another exchange, but they have relationships with these exchanges, so they can figure out how to do this very well. And it's going to be pretty interesting to see how secure they actually do it and how they actually handle it. Now, something that really sparked my interest was that they also specified that the banks that are entering the space should develop and implement those activities consistent with sound risk management practices and align them with the bank's overall business plans and strategies. So this kind of leads you to believe, what are they going to be doing with your cryptocurrency when they have it? Are they going to treat your cryptocurrency like cash and use it to invest on the side? I kind of doubt that. I mean, I really doubt that. But what I was really interested in was, does this mean, because of the risk management, that they will insure the value of your cryptocurrency? Because if banks will insure the value of your cryptocurrency, I believe people will start to use it, and they will store it on these bank wallets, however you want to call it, these crypto bank accounts. People will be more willing, and by people I mean like general public, will be more willing to get into cryptocurrency because the bank offers a nice secure way to store their cryptocurrency. They don't have to worry about any of the hard stuff like managing your hardware wallet and, setting and saving your recovery seed somewhere. All of that's managed for them by the bank, and that's honestly what's scaring a lot of people away from crypto, in my opinion. So something like this with insured value on whatever coins or whatever assets you have stored digitally with the bank would be huge. And I do think this is actually going to happen, but it's going to be interesting to see if they insure cryptos, more like Litecoin, Ethereum, Bitcoin, the ones that change in price wildly, or if they are just going to insure stable coins, ones that they can know the value for. Because if you've noticed, some crypto exchanges that do insure the value of the crypto held on the exchange, they have to increase their insurance policy as more people deposit onto their platform, and that insurance costs money. So whenever people start adding more or the price goes up, they have to increase their level of insurance to cover all of the funds that are on the exchange. So that's something to keep in mind as well, what they are actually going to insure. So what I'm seeing from this is, and I've already mentioned, people will be more willing to purchase and store cryptocurrencies as they'll be with the bank. So if your bank, and let's say you're logging into your bank account and you pull up your accounts and you see your checking, your savings, your loans, and then below that you can see Bitcoin, Ethereum, and others. Well, what are they going to do? Are they going to allow you to withdraw Bitcoin and Ethereum and kind of opt out of the banking system? Or are they going to force you to transfer those coins to an approved address for another bank? So that's kind of interesting to see what's going to happen there. I believe they will probably allow you to withdraw, but honestly, you could very well see that. What I'm trying to think of the other thing here. Sorry. The other thing was that if the banks are going to have these accounts on their website that you can just access your cryptocurrency and its storage, why wouldn't they also integrate an exchange as well? Because honestly, when you're looking at a list of accounts, you're looking at an exchange, a crypto exchange, and for example, you pull up your Coinbase or your Binance account and you go to the wallet, those are your accounts. Similar to how you're looking at your personal checking or your savings, those are your accounts, but with different currencies. They're pretty much the equivalent of a checking account for your cryptocurrencies, all the different ones, and each account is a different cryptocurrency. And why wouldn't the banks allow you to exchange that there and keep your money with them as well? So that's something that's very interesting to me as well, just seeing how this is actually going to come and basically take place. What's going to happen? This is pretty wild to think that your bank is going to be offering custody to Bitcoin, Ethereum, Litecoin. All of these cryptocurrencies could possibly be stored and saved with your bank. Are they going to be insured? Are you going to be able to withdraw from your bank? What's going to happen with this? But what I'm really interested in is the digital dollar. And I think the digital dollar is more so the reason why this was allowed. If banks can't manage these digital assets or weren't allowed to manage these digital assets, they wouldn't be able to manage your digital dollar or your Fed bank account, as they're kind of referring to it in the committee hearings. So they needed to clarify this and put that out there before the digital dollar could even be introduced. It seems like the digital dollar is getting pushed forward quicker and quicker here recently, especially with the coronavirus impacting people and basically the coin shortage as well. People are recognizing that there is a need for this kind of digital currency. Some people are actually afraid of it. It's kind of wild. And I can see why in some aspects, but this digital dollar, it's going to happen. And I think that this was created, or this letter, this regulator update, whatever they call it, letting them know that they can provide custody for the cryptocurrencies is, in fact, a major piece that was needed for the digital dollar. to come through and the banks to manage those as well. So banks may or may not actually get into crypto, but I believe they will be managing your US digital dollar bank account here in the next few years. Okay, so I've went on about that, and I apologize. I kind of lost my train of thought there a couple of times. I like to do these videos in one take, so that happens every once in a while. All right, so let's take a look back at Bitcoin and Ethereum. So I have both of these charts pulled up, and let's see, where was I? I'm trying to pull up the moment that I decided to enter into a long here. So this is on Bitcoin. I believe it was actually on the hourly chart. My apologies. Yes, so what happened was this. The price started to move up, and then it started to come back down, but it didn't go down very far, and it had this kind of crossover, excuse me, it had this kind of crossover coming up, and it looked like it was pretty imminent that the price was going to go up quite a bit. And I remember now, it was actually the 4-hour chart. My apologies. So here we are on the 4-hour chart. You can see it had that kind of crossover here, keeping your mid Bollinger Band and all of these. This is when I looked to get in. It was pretty clear that everything was going to be turning up on this particular chart with all these different indicators. So I was really thrilled about getting in when I did on that. You can see everything is lining up nicely as far as the moving averages are concerned to have a continued run here. Now I do think we are at the point where things are going to check up. There is a pretty clear divergence here. If you'll notice, we have a lower high on stochastic weights and you have a much higher price. And honestly, this divergence should have been here. If you were actively trading, you were well above the Bollinger Bands on this hourly chart, and you were well above the daily Bollinger Bands as well. So if you're looking for divergence, that was a prime example of a bearish divergence, although I don't think it's going to have a whole lot of follow through. I think at most we're going to come back down to the mid Bollinger Band somewhere around $267, $268 before continuing up. And I believe that it is going to, well, the price on Ethereum and Bitcoin both are going to ride the upper bands, and in this case between the middle and the upper bands, for some time. That is just what I have noticed in the past when these huge bullish movements start. If they are truly bullish, they are going to remain in these upper bands for some period of time. They are going to punish all of the shorts that try to get in, and you're just going to have a bad time if you try and short. And then once you think it's finally a good time to just give up and go long, that's when they're going to crash. But honestly, I could see this going on for quite some time. Everything is very bullish, and I say that because when you go back and you look at the daily chart, everything looks really good. And I mentioned this a couple of days ago, and this is another reason why I got into a long yesterday before the price exploded, was because we had the crossover on the stochastic weights. This was a huge moment. Now this actually was kind of hinted at here that it was going to happen on the next candle. It was obvious that the next candle had to be a very big red candle to prevent a crossover, and it wasn't a big candle. And in fact, the moving averages held. To me, it seemed going into the day that I wanted to look for longs, and it turned out that was the play, and I'm very happy that it was. You can see all the momentum is pointing up though. You've got the MACD, you've got smooth RSI, you've got the stochastic weights, you've got all of the moving averages pointing up. It's above, it's trading above all of the moving averages. And then you've got Bitcoin about to do the same thing. And this is on a daily chart. Bitcoin is about to have all of its key moving averages aligned, one above the other, respectively, based on their period or their length. And then it gets even better than that. It's like everything is kind of lining up for crypto. Take a look at the weekly here. Now, Ethereum is a little bit different, but when you look at Bitcoin on the weekly, it looks a lot like the smaller time frame charts on some of these other assets, these other crypto assets, I should say. But the weekly looks incredible. To me, it looks like it could very well turn super bullish. Now, Ethereum is going about overtaking the 200 week, and again, I'm at a loss for words at times, my apologies. It hit its upper weekly Bollinger Band, excuse me, and it's checking up from that. If it closes above the 200 week moving average, it's going to be a very good sign. And back to Bitcoin, what I am looking for and what I am looking at right now are these momentum plays down here. So the stochastic weights, it's probably going, as long as this closes up with this huge green candle, its momentum is obviously going to be pointing up, and there is quite a bit of room for it to move up. The smooth RSI is still trending up. It has room to move up. The MACD is just jolted upwards yet again. And then back to Bitcoin, it appears like it is on the precipice of having its momentum shift upwards as well on the smooth RSI and preventing a bearish crossover on the MACD on the weekly chart. So this is all kind of dependent on how the rest of the week goes as far as the weekly chart is concerned, but it's going to have to crash, and it's going to have to ruin a lot of people in the process. I think a lot of people have went long. If you just look at the market sentiment on Twitter and other places, people seem to be very bullish right now. There has been a break of pretty much every diagonal resistance from patterns that you could draw on Ethereum. Really, and I posted about this, all it's got left are these horizontal resistances, and once it breaks those, there's no telling where it can actually go as far as price. And right now, I don't even know where I'm going to be looking for a target if it breaks out. Probably the first target would be this weekly dip here from the first crash from the bubble, which was, let's see, around $373. I believe that would probably be a good place to look for the first one if it continues to go up and close above that 200 week. Okay, so I've went on for quite a bit. I really wanted to talk about the banking stuff with crypto and the digital dollar because I've been following that really closely. And then I also wanted to show the TA with you all and why I think that this is setting up to be potentially huge bull run. And don't forget, gold and silver are also exploding right now, and people compare Bitcoin, Ethereum, and Litecoin to kind of gold and silver themselves. So just something to keep in mind as well when you're looking at these things. But that is going to do it for this video. I appreciate all of you all for watching. If you like the video, please leave a like. And if you're down there leaving a like, please go ahead and subscribe. Hopefully you've liked the video. So if you're liking the video, you'll want to watch other ones like it. So go ahead and subscribe. We do videos like this occasionally where we talk about TA. I do some live streams as well. And there's actually a lot of videos on creating your own indicators and strategies on TradingView as well. But that's it. Thanks. Have a great day.